Opendoor stock, ticker symbol OPEN, has delivered a massive rally this month, rising over 300% and finishing last week at $2.54. And now, as we head into the trading session before the big vote on the company's proposed reverse stock split, all eyes are on what comes next. So let's set the stage for this crucial pre-market moment. It's early Monday morning. The market is still quiet. Futures are flat. But Opendoor traders aren't sleeping. They're watching every tick, every update, and every bit of chatter on Reddit, Twitter, and StockTwits. Because today could be a turning point, not because of a sudden earnings drop or a housing market collapse, but because of a shareholder vote. That vote? It's about whether to authorize a reverse stock split. And while that might sound like a technical footnote, it has big implications for the stock's future. Let's break this down. First, here's the context. Opendoor's board is proposing a reverse stock split to regain compliance with NASDAQ listing requirements and potentially position the stock more attractively for institutional investors. The idea is to reduce the number of shares and boost the per-share price, without changing the company's overall value. But this kind of move is often misunderstood. Some traders view reverse splits as red flags. They associate them with companies in trouble. But that's not the whole story. A reverse split doesn't hurt shareholders directly. It doesn't dilute value. And in this case, the board has been clear, they're only going to implement the split if absolutely necessary. This is where the psychology kicks in. Retail traders, who've been the backbone of Opendoor's rally, now face a decision. Do they see the reverse split as a threat? Or do they recognize it as a technicality, with the real action still to come? Let's talk sentiment. Right now, Opendoor has been one of the most discussed stocks on social media. Reddit threads are flooded with speculation. Some are bracing for a dip. Others believe this is just the start of something bigger. And they might be right. Because here's what's really moving the needle: earnings. The upcoming earnings report, expected in August, is shaping up to be the most important catalyst. If the company shows improving revenue, tighter margins, or even a path to profitability, it could validate everything this rally has been built on. A strong report would shift the narrative from meme stock to serious turnaround play. And that's where long-term value and institutional attention could come pouring in. Now, let's take a look at the charts. Opendoor has been building support in the $2.20 to $2.60 range, which is key. We saw a massive intraday rally on Thursday that touched $2.91, and on Friday, the stock held steady, closing at $2.54. Even more bullish, aftermarket trading showed another jump, suggesting conviction among holders going into the weekend. That's no small thing. When traders hold through uncertainty, especially ahead of a big vote, it signals confidence. It says this rally isn't just hype, it's belief. So, what should you watch for in the pre-market and opening hour today? Number 1. Volume. High pre-market volume could signal incoming volatility or directional bias. Number 2. Any announcements or updates related to the vote. These might come in before the open or during the session. And number 3. Early price action. If the stock holds above $2.50, it could suggest that support is firm and that traders are comfortable going into the vote. If it dips below, keep an eye on how quickly buyers step in. Now let's talk game theory. If the vote passes, it could create a new narrative, one of maturity, readiness, and strategic alignment. Some funds and larger players prefer to invest in stocks above $5, and a reverse split could open that door. If the vote fails, it might be seen as a retail victory, a statement that the crowd is in control. That could spark more momentum, especially if it's framed positively on social media. Either way, the vote itself isn't the endgame. It's a footnote. The real catalyst, again, is earnings. And with the housing market showing early signs of recovery, with mortgage rates stabilizing and transaction volume poised to pick up, Opendoor could be perfectly positioned for a bounce. And let's not forget, some analysts, despite being quiet, are still holding on to that ambitious $82 long-term price target. That's not based on Reddit threads. That's based on market share potential, efficiency gains, and the long-term disruption of real estate. So as we gear up for today's market open, remember this. The split vote is a spark, not the fire. Earnings are the fuse. And retail sentiment? That's the fuel. Keep your eyes on the charts, stay sharp in the first hour, and let's see how this next chapter unfolds. If you found this helpful, Hit like, subscribe for daily updates, and drop a comment. Are you voting yes or no on the split? Let's talk strategy. Thanks for watching.